Matt Horne, how are you? Thanks for coming on.
I'm doing fantastic, Ryan. Thanks for the invite.
Yeah, absolutely. So I'm actually really excited to talk to you, to be honest, because what I always tell people, like other investors and everything, is like, man, my partner Mike and I, we've done everything, right? We've done commercial, we've done rentals, we've done Airbnb, we've done everything under the sun except storage. So it's an asset class that we've looked into multiple times. We've had properties under contract before. We've got friends that do it. It's just something, for whatever reason, has not played out over the last decade that we've been investing. So I'm like, okay, wow. Like I really usually feel like I know the lay of the land when I'm talking to somebody, but I think this is going to be educational for the listeners and for myself selfishly. So hopefully you can sort of tell us how this whole self-storage world works.
Awesome. I'll be love to be an open book for you, and I'll definitely do my best to educate.
Awesome. Awesome. Okay. So let's get started with how did you get into this space, like into the whole real estate space, like day one, talk me through it.
Yeah, so it's pretty crazy. I tell everyone there's normally an amazing story or a wild story about how you get into, self storage specifically. You don't just wake up one day and think, hey, that looks cool. I want to go do self storage. So, for me, I was in education, for about 10 plus years, and got to the point where I wanted to switch into the finance world, and ended up working for one of the larger, financial money managers. Kind of decided I wanted a little bit more entrepreneurial, ways. It was a little cookie cutter for my liking. I ended up getting a job as a producer for the Money Show, which was a high net worth investor event. We would do, at that point in time, we were doing like 10 events a year. That year specifically, I was doing an event for the first time ever in Philadelphia and Seattle. Those were my two new production areas for the Money Show for that year. And one of my childhood friends was in Philadelphia at the time, Rick Shantz. He's with Cityline Capital, and I'd reached out to him for dinner, and really, obviously want to see my close friend, and selfishly too, I thought I could help him out by bringing him investors, because I know he had just opened up shop in the self-storage space. And, lo and behold, we sit down for dinner, and, I'm like, hey man, let me help you out. I got all these investors teed up. We're going to have a few thousand people there. What are you looking for? What do you need? Talk to me. And I'll never forget, he turned to me at the dinner table and he's like, Matt, I don't need investors. He's like, I got to get, 350 million out the door in the next 6 months. And, for me, coming from, working with every alternative asset class imaginable, and everyone needing investors and wanting money, I was like, wow, like this guy, he's sitting here with the opposite problem. He has so much money that wants to get into this space. He's having a problem getting it all placed. I'm like, wow, like my head's spinning. He dropped me back off at the hotel, and I couldn't get I couldn't get it off my mind. I'm like, I want to know more about this. I want to learn about this. And, I texted him like, hey, well, what would you think about me, maybe moonlighting for you, doing some deals on the side? He's like, we really need someone full time. And, I said, well, let's talk about it. What does full time look like? And, I flew up, met the partners at that time, and, lo and behold, ended up getting hired, and, was the first acquisitions, member for the company there. And, we went on to do, I think over $1 billion in the 4 years, almost 4 years I was there. So, and me being green, at the time, I really didn't realize, how big of a deal that was until, the longer I got in it, and, going to conferences and talking to people, I think we were the fastest growing private real estate company in the country, during that time. So just extremely blessed to have got in with that group, still, love them, their family. It was really tough to go out and, do my own thing, but just extremely blessed to have been there and seen it, really at the highest level, and to be part of it. I think we were doing, averaging 50 deals annually during my tenure there. So it was just an amazing experience. And that's how I got, started with self storage.
Wow, that's really amazing. That's a ton of capital to have to place. I'm sure that was, while exciting, also probably a daunting experience to try to wrap your head
Yep.
around. I gotta ask. So okay, so these guys clearly are big players. Like, how were they raising that much capital? Like, they had a ton of experience in the space. They've been doing it forever. Like, where is this money coming from?
Yeah. So they, obviously, he had been a seasoned broker. I'm going to speak on his background, but he was a seasoned broker. He had met with the right buyers on the brokerage side. On the brokerage side, he had connected with the right buyers, and long story short, ended up getting into some, 1031 dollars, from a boutique, investment bank, and the rest was history.
Wow. Okay. And you've got a couple $100 million to place, right? You're walking into this job, like it's a crazy experience. You're excited. These deals that you're buying and placing these funds in, like, where are you getting them? Are they off market? Are they on market through brokers?
So all of the above. My job with the group was, I led the off market acquisitions team. We obviously had to do that. When you're placing that kind of capital, you got to do it every way possible. On market, broker relationships, off market. So it was a combination of all of those things, over the years, and it still is, to get that kind of volume and that kind of money out the door.
Right. Okay, so before we get to how we got to Storage Point Capital, I want to ask. This is a selfish question because I spend a lot of time listening to high net worth individuals. From the people that you've heard about, like Bezos, to people that have passed away, like Rockefellers. I'm always fascinated by those people, like how they got there, and to be honest, like I don't know if you'd agree or not, but like sometimes, actually a lot of the times, it's like they just like made it happen. There was never like some crystal ball that they had. It wasn't like some amazing thing that they did. They just like started it. They decided they wanted to do it, and they made it happen. So my question is, when you were doing the money show, you said you were working or talking with or hosting a lot of high net worth individuals. Yep. Is there like one or two things that you took away from working with those people that were like, wow, like this is how they're doing it? Was there anything like that?
I mean, I can't think of anything that stands out. I mean, it's all pretty much similar type, mentalities though. I think a lot of it honestly is right place, right time with the capital. Not everyone's was successful in everything that they've done. There was a lot of failures along the way to a lot of those ultra wealthy people, getting to where they're at. So I think if anything, to take that for people new in the industry or that have been doing something or failed at this or failed at that, I found that to be a pattern. Not everything these guys touched was gold. Sometimes it was being in the right place at the right time with the right product or the right, the right structure for what you were doing. And I found that to be, a big part of a lot of the people that really took off, like a rocket ship and, whatever alternative asset class it was. I think it had a lot of wind at their back, at those times.
Right. Yeah, no, I would agree with that. In what I've discovered from those kind of people, I would agree. We were just talking to another broker the other day, and he was talking about, I'm in Connecticut, and this is where we invest, but, he was talking about buying properties in the 80s, for $50,000 that are now worth 10 times that. It's just like time kind of like really helps things. Like if you're able to hold on to stuff and you're not forced to sell, it's like, yeah, when you look back, 40 years later, you're like, okay, like there were some ups and downs, but overall, like, hey, I'm up, like 10 times, and this is a good investment, Yeah, my partner and I always struggle with that. Sometimes, buying, top of the market, you're like, this isn't a deal. And then we look back 2 years later and it's like, yeah, we should have bought that. So
time heals a lot of wounds.
Yeah, it does.
For sure, especially in investing.
Yeah. So City Line Capital, you're trying to place all this capital, all this money. You're heading up the off market team. What does that look like? I mean, are you doing off market how are you finding these off market deals?
Yeah, I mean that was bread and butter. For me, that's that was my area of expertise, and that's what Storage Point excels at is direct deal flow, and it's not rocket science. It's a matter of knocking on doors, making a lot of cold calls, building your Rolodex in your network. I mean, that's really what it is, and really just understanding how to separate yourself. It's a lot easier to contact these fellow owners when you're an owner yourself. When you can speak their language. I'm speaking to them as a peer to peer. It's not like, hey, can I please list this? Or it's like, hey, listen, let's become friends, and I'd love to be an exit resource for you when the time comes. And in the meantime, let's give it a shot, and see if I can give you a strong enough offer that you ride off into the sunset.
Yeah. Yeah. So that's really interesting because what I do at Skytree is a lot of the off market deal finding. So two of the things that we're doing right now, and your operation is definitely larger than ours, but what we're doing right now is, and it's been working really well, is postcards and actually mass text messaging the legal way. I will just throw that in there.
Right.
But yeah, we've been doing a lot of that and seeing some success. I actually really like the text messaging because it's so much less expensive than the postcards. Like, are you doing any of that? Are you literally, is it all just relationships and referrals, or what does that look like?
I'd say 95% of it is relationship, referrals, cold calling. Obviously, as time, innovation changes things, right? We're actually working right now with a developer on some different, AI product that, I don't want to let the cat out of the bag, but it can do some pretty cool things, from an outreach standpoint, an appointment setting standpoint. So we're always looking at, new innovative ways, to grow the pipeline. I think, nothing will ever be better than, the traditional, cold call. At least for me, I get the calls, and it's fun being on the other side. So many years of being, the one making those calls. I almost feel like I want to grade them and critique them, which is kind of, I don't know. I mean, maybe they like it, maybe they don't, but I try to give my input, whenever I do get those calls and say, hey, let me just tell you, like, I think you did great on your opening. Maybe here's where you could have driven a little bit harder in this area. Maybe that's just a coach and sales trainer in me, but I think the cold call is, the best. I mean, it's, if you can get that relationship, you can build that rapport, on that initial 15, 20-minute conversation. And really, for me, it's, I want to bring value. I'm not making a call to someone just so I can buy their facility. I want to say, hey, this is, we have one down the street. This is what we're seeing, want to give you, some perspective, some things that may be helpful. We have a whole, analytics team. Is there anything that we could do to help you guys? I just think it's everyone's in it for themselves. And that's one thing that we really try to differentiate ourselves is what can we bring you, so we're not just asking for something. Even if it's down the road and you want us to help, vet a, development site for you, and, do some demo homework and, get you some high level details on what, we think of the project. Those types of things are some of the things we really try to set ourselves apart with.
Wow. Yeah. I gotta admit, I suppose I'm probably guilty of
everybody is. Don't feel bad. Everybody is. Don't feel bad.
Okay. I thank you for saying that because I was kind of feeling bad because usually I'm just asking like, hey, great property. What do you want to sell it for? It's kind of one of those things, but I like that. There's no harm in like, hey, is there something I can help with down the road? I know, are you if they are moving out of state, let's just say, hey, I know a great moving company, or oh, you need a roof? I know a great roofer. And, just, and then it kind of gives you an opening to follow up in a month or two. Like, hey, how did that go? Or did you end up moving? Did you end up doing that roof? I like that. That's a good thing to kind of throw in there.
100%. It goes over well. If you're authentic, which we are, integrity, transparency. I mean, those are staples at the firm, and we live by them. At the end of the day, you're only as good as your word and your name, and you can build it up for 20 years and piss it away in a matter of seconds. And excuse my language, but it's something that's real. And for us, we want to bring value. We want long-term relationships. This is a very fragmented industry. It's a one handshake industry. People know people, and the last thing you want is to get some bad mojo behind you, or you don't want labeled with anything negative. And I think we really pride ourselves on doing everything we can to help. If there's something we can't get the deal done, let us know how we can help down the road. And we have a lot of tools that can help, especially smaller operators that may just be looking for some feedback. We do consulting work, so that's stuff that we like to put out there.
Yeah, no, that's a great point. I mean, honestly, I know you'd agree with this. Like, you make one mistake, you don't do what you say you're going to do. It's not so much Google reviews anymore. It's like the power of social media. Like, I mean, you could spread a lot of negativity about somebody that kind of did you wrong on Facebook or wherever the medium is really quick. So you want to make sure you're the guy that people know will close, not only close deals, but will do what they say they're going to do.
Yeah, I mean, word of mouth is even, you go, I don't know if you've been to any of these conferences, but, we do lots of conferences, and there might be a few thousand people there, and, word of mouth spreads pretty quick when you're around, a few thousand industry veterans. And, we've heard the noise in other groups and other people, and, they retrade, don't do this. And, you start seeing that early on, and like, I don't ever want that. I don't ever want to, if anything, I'm going to do what I say I'm going to do. I'm going to sit down. I'll go line by line through my underwriting with you. Let's see where there's a disconnect. If there is, pricing difference. All right, well, let's talk about where you're at. I'd like to, know how you came to that number one. And number two, I'd like to show you how we're evaluating this, and I'll show you our returns, and, I'll show you exactly how we're forecasting this with our pro forma. And, that's another really strong, weapon that, a lot of people don't, they just, we're too far off. We're 25% off. We're 30% off. Let's just kill it. Move on. No, you want to take that extra time. Let's sit down. Maybe there's an extra 6,000 square feet, that we can develop that we're not factoring in because we didn't get all the information, or, maybe we're missing an additional 2 acres, or, maybe there's rent for one of the offices that we're not factoring in. So I think all those things are just so crucial to just have an education session with these owners. And if nothing else, they're going to come out of it knowing you're being honest, with them. And I think that, that goes a long way. And I can tell you, over the last year and a half, like when we first opened shop, it's probably one of the most challenging times in my time as far as acquisitions. Basis points go up 500 points overnight. All of a sudden, these sellers don't understand why they had a broker opinion of value at $20 million last year. And right now we're giving them an offer around 15 or 16, and they're making the same amount of money. They don't understand. Like, my NOI hasn't changed, Matt. You're just lowballing me. It's like, well, no, let me show you how this debt, everyone, unless you're paying straight cash, which, I don't know too many people out there that can do that or are doing that. You want to leverage your capital. And to do that, you're at the mercy of the debt market. And that's, that really, threw a wrench into, acquisition volume last year, I think, across the board. Groups that are typically extremely active, weren't doing a whole lot or anything. So it was a very interesting time. But I say that because, we had to have those tough conversations. We're the tip of the spear. We know where the market's at this second. And we're going to have that conversation. Sometimes it's with a seller who, may not, be up to speed. They only have a facility or two, and they're a few months behind, the times on what's going on in the market. And the last thing you want to do is, them to leave with a bad taste in their mouth because they think you're trying to get one over on them.
Exactly.
So, that's something that we had to implement, just because of the changes in the market so dynamically, so quickly, that it was necessary to do that, just to make sure that, they knew, like, we're not trying to get you here, bud. This is what's happened in the market,
Yeah, I can't say enough about that. And we started doing this recently when we're talking to sellers. And like I said, like, we're not buying self-storage, but it goes the same way if you're buying a duplex or a 6-unit, 20, like whatever it is. Like, first of all, you should be running numbers, right? So we use a particular spreadsheet. It's nothing fancy. But we've been like, hey, look, like, I understand you want $1 million for this place, but like, look, like, based on the numbers that you gave me, I'll send you my spreadsheet. I'm just trying to not lose money. Like, at this price, at this rate that, that I can get in this environment right now, I'm going to be losing X per year. I just don't, like, at least let me break even. That's how you kind of get the conversation going. Like, otherwise, like you said, like, it's just like, hey, you're lowballing me. Well, no, I'm really not. Like, you said the taxes are this, insurance is this, the utilities are this. Like, you gave me these numbers. Like, my net after all of this is X, and I really need to be at Y. And then the other thing that people kind of forget when they're selling properties is like, oh, no, my property makes money. Well, yeah, it made money when you bought it, 10 years ago or 20 years ago at half of what you're asking now, which,
right.
It's like, of course it makes money for you, but when I'm buying it at this new price that we can hopefully agree on,
tax reassessment, insurance,
exactly.
All these things that have gone up, like crazy, it's just like one thing after the other piling up to where, they're not factoring. Well, they're like, well, it's a 6 cap on my, NOI, but yeah, you're not factoring in your tax reassessment. You're not factoring in, what the insurance tripled over the last year, all these things, like I said, the education piece is that's why it's so important. And I don't hate, but I really dislike when they ask, well, what cap rate are you buying at? And it's such a loaded question because there's so many variables on what my expense load is, compared to yours. It's not apples to apples. A 6 cap on yours, might be an 8 cap for me, or a 6 cap for you might be a 4 cap for me. It's one of those things that when you hear a seller, bring it out, sometimes I feel it's almost they're trying to pretend they're more educated than they really are. Because once you get into the nuts and bolts, you realize just how many variables impact that. Sure, we can do back of the napkin, and yeah, that's kind of our target. But there's just so many variables, especially over the last 2 years. We've seen insurance quadruple in certain areas. The taxes have always been an issue, but the insurance specifically has been. We've had to walk away from a portfolio deal because the insurance 4x'd on us. And no one's making any money at that point in time. So, been an interesting, last 18 months ish. So
yeah, couldn't agree with you more about the insurance. That's been a wild ride. I've never thought that the insurance would swing a deal as much as it has lately, but it has. So, I want to go from the transition from City Line to Storage Point. Talk to me through. You were chumming it up with those guys. Like, so what does that look like? What does that transition look like?
Yeah. So, being where I was at in the space, I was kind of out, I was always at the events, kind of the mouthpiece out there trying to, do as much as I could for, to bring attention, deal flow, et cetera. But, along that time you get, you meet a lot of people, and then very soon, they're talking to you. Well, why don't you do this, or why don't you try that? And me, like, I'm so super loyal, So it was probably one of the hardest decisions I've ever made in my life, and it wasn't easy. I did such a good thing, such a great friendship, a great relationship with everyone there, but it boiled down to I needed to make this decision. If I didn't, life's short. You know, I at least needed to give it a shot. For me, if I'm not challenged, and I feel like I got to the point where I was on cruise control, you know, I could do it in my sleep. You know, I needed a challenge, and man, did I get it? Did I got I got a challenge that I needed, you know, and making that transition, you know, it was, you know, obviously right at the end of 2022, early 23 was when everything was in motion, and we didn't open our office, I think, until February or March. But it was just after, the swing with, interest rates, and, the beauty of that transition, it really allowed me to sit down and just build a dynamite team. It allowed me to focus all my attention on that, because, deals were few and far between, so it's like, when do you want to start, an endeavor like this? Do you want to do it while, the market's hot and deals are flying off the shelf and you're missing those opportunities because you're in, rebuilding mode or building mode? Or, I try to look at it the glass half full. I was able to do it in a pretty stagnant market, and it allows us to tool up and get to the point where we have a well-oiled machine now that's ready for battle, for when this wave we're starting to see crest. We're seeing the activity. I mean, we sent 3 LOIs out this morning, alone, which, there was a couple months where we might not have sent 3 in a month, over that time, just because the bid and ask were just so far away. So it's just so exciting to be where we're at now, knowing that we have this, and no one has a crystal ball, but I feel like the writing's on the wall that we're going to see much better times over the next, 12, 18 months, 2 years. And we're seeing it now. We're seeing it over the last 8 to 12 weeks, where things have really picked up. I think everyone's looking to get a strong, Q4 close. But I think, like I said, the beauty in all of that is there's never really a good time to just build something like this out. There's a lot of pieces that go into it. If anything, it was tough not, getting the, having the deal flow like, obviously used to. But the bright side, it really allowed us to, really be, focused on our hires, on our training, getting everyone on the same page, a real team-oriented environment. We were able to build that. So, that was kind of the beauty of it.
That's awesome. So let's, day one, you open up your doors. Like, I imagine you don't have as much capital as you were sitting behind before. Like, were you raising money? Were you using your own?
Yeah.
Like, what did that
So
look like?
I had some, we have some high net worth investors that are pretty good, pretty loyal. So I knew I had some money to run with, out of the gate. So that really wasn't a concern. It's, I feel like right now there's dry powder everywhere. The deals aren't getting done. The money's out there. We've really just seen, it separate really the men from the boys, when it comes to this space, because if you're not sophisticated, you're not going to do very well. I think the market's shown that the people that were still able to get deals done, the people that were still actively trying, versus the people that, the money's not free anywhere, not giving 3% money out where anyone can make a deal happen. Now you really have to have A+ business model. You have to have every I and T dotted, or you're not going to make it. And the bank's not going to buy it. I mean, so I think anything you were able to get a loan on over the last year, you did well enough to get yourself, get your debt service coverage ratio covered, and investors happy. I think it's going to be a big win in the long run. But obviously, it was a very challenging environment over the last year.
Right. Yeah, I agree with you. You said you sent 3 LOIs this morning. Like, at Storage Point, what does a typical deal look like? Where? How many units? Like, walk us through that.
Yeah, absolutely. So for us, we have a couple different buckets of capital. We've just opened up a development arm, recently, which we're in the infancy of that, which it's taken about 16 months to get to where it's at, just with getting the right people in the right places. That was something we didn't do in my last firm. And, I think I understand why. It's just such a long burn. And there's a lot of, a lot of heartburn, when it comes to that. So, but that is one area we are focusing on. We have a JV agreement, a deal in Boston that's closing in November, and so that's exciting. It'll be a ground up. So we do look at ground up. For us, these deals down the fairway for us is, just call it sub 10 million. Value add. Maybe it's mismanagement. Stabilized. Maybe close to stabilized, or we'll just call it 60, 70%. Mom and pop, mismanaged type of assets. We just closed on a portfolio up in Pittsburgh last month that was just that. It was it was about 70,000, only 70,000 square feet total. It was only 2 stores, 70,000 square feet. But we were able to get in there. We were able to throw an additional 5,000 square foot of box wells in it. We're able to get, the marketing. We're putting, our branding on it. It's going to be storage point, paint it, get professional management in it, really maximize these things. It's, finding, we're agnostic to location when it comes to deal flow. Right now we're in the Northeast and the Southeast with our portfolio. Obviously still in the infancy of growing that, but, we'll go anywhere it makes sense. It makes sense. That's kind of the cool thing too, especially for our acquisitions guys. But you'll find out that there's a lot of markets right now that make a lot more sense than others. Florida right now, my God, is it, when you're talking about, what we're seeing, we have 5 sites in Florida, and, the insurance is like we talked about. It's not even what it's been, it's what's coming now after Helene and Milton and these storms that have devastated areas down here. They get, insurance is going to get their money one way or another. They're going to get their pound of flesh, whether it's this year, next year, the next 10 years. That's coming. So, we really like Florida, but I feel like for us now, we're kind of focusing more on Northeast. We like certain pockets of Texas. We love the East Coast. So for us, I'd say, down the fairway, you're looking at, sub $10 million with some type of value add component, near stabilization, or at stabilization. We can be really competitive with those deals.
Yeah, that's interesting. So, just give me like a frame of reference. So, 70,000 square foot facility, like you mentioned, how many units is that?
Yeah, I think that one was a total of around 400 or 500 units. I think one site was around 250, another site was around 300-ish, I believe, off the top of my head, not looking at it. But typically, 500 units or below is kind of a good target for us. Depending on what market you're in, you're looking around 10 million-ish, give or take, for that size.
And under 500, I'm guessing is your mom and pops, right? Like that's sort of like your bread and butter.
Yeah. Like I said, it's, those are people typically, it's all about basis. What basis did these people get in? And it's always great when, the portfolio we bought, the guy had built these things in the late 80s, so the guy's in it. He doesn't probably have any debt on it. If he did, it's probably because he wanted to pull some cash out to do something else on, with it. But they've made their money. They're going to walk away with a real nice paycheck, and we're going to walk into a situation that we know we can capitalize on. We know we have the tools, we have the management, we have the analytics to really know that where we can take these to, and that's really the edge right there.
Right. So I do lending as well as my regular investments. So on financing a storage deal, everyone's used to you got to put 20% down, and what does financing look like? Is it a higher down payment? Is it a higher rate? Is it a lower down? What do we like a typical financing arrangement?
Yeah, so I can just speak on the last deal that we've done, the portfolio deal. We had a 75 loan to value. 75 LTV on that. And we got a 25-year AM, and we were at like a 7.2, which we locked it up, in the middle of the summer, I think around July. So not the best of terms, but not terrible, when it comes to that. But you got to understand, when it comes to storage, you're talking about probably the least risk of any asset, from a, historical perspective. I mean, the numbers are pretty crazy on that. So, banks love self storage, and they love operators that know what they're doing, just because their risk on it is very minimal. So you can typically get pretty good terms.
Yeah, I want to. So, like I said, I've never bought self storage. I'm extremely interested. Two things I want to hit on. One, with apartments, and I'm sure you're very familiar with apartments. Someone doesn't pay, and I'm in Connecticut, right? Like, this isn't Texas. We can't just throw you out.
Yeah.
Like there's a whole eviction, charade that we have to do. So let's take a self storage place. Someone doesn't pay. What happens?
You're gone. Typically, depending on where they're at. You used to have to post things in the newspaper. You have to post like do an auction, but you have to give them an opportunity, to pay it. But it's quick. It's bing, bang, boom. You're not waiting, months typically. Now, each state differs a little bit. I lean on my operations and management team for that. But the good part is you can get them out quick.
Is it like that show? I don't know if it's even on that
Storage Wars.
Yeah. Is it like that? You just like open up the door and you're like, here you go, or
it is. Most of them are doing it online. You don't. That shows a little bit dramatic. At least in my experience in our stores, they do those, but it's not as exciting as those shows.
Okay.
Typically you're looking at maybe a stained mattress and a waterlogged end table. So most people, if they're walking away from their stuff, it's not anything too exciting. But really for us, it's a huge benefit because we don't have to clean it out. So it's a win-win. They're coming in, they have to clean the units out, take with them all the stuff. So quite honestly, we would pay people to do that. So it really benefits us to do the auctions.
Wow, that's really interesting. So also thinking about, the logistics here, again, I'm very familiar with apartments, right? You've got people living in the space. They're cooking. They've got a gas range. They have a refrigerator. They've got a sink in their kitchen, in their bathroom. They got a shower.
You got headaches.
All of these things. Yeah, exactly. So all of these things are prone to breaking, to leaking down into the apartment below. So obviously what I'm getting at is self-storage, correct me if I'm wrong, but doesn't really there's no kitchen. There's certainly no bathroom in the unit, right? Maybe you have a general one that people use, but like talk me through like what are the benefits of self-storage over just a regular apartment?
Yeah, I think you named it. I mean, you're talking about this is a brick and mortar steel. There's not running water. Some of the fancier units, if you're doing larger RV and boats, some of them may have power. So you do supply power depending on what type of units they are, how big they are. Majority of these are just concrete, steel walls. Worst case, you may worry about some rodent infestation or something like that, where that could be a headache. You get a roof leak. That could be a headache, but I mean, those are really the big headaches. It's not like, I think you're coming from like a multifamily, like, oh my, why was I dealing with all those headaches when I can go get just as good, if not better returns doing this? I mean, listen, you're talking about self-storage. What other asset class can you run, $1 million, plus, revenue stream and have, maybe one and a half employees, running it. It's just, sometimes none. Once those things are up to, stabilization, you run, fully remote, so you're paying someone, on the phone, part-time. So, from an operations, I mean, it's as, to me, it's as good as you get.
Right. So one thing I will say, a lot of the apartment buildings that we do have come with garages, right? And a lot of the tenants either don't have cars or don't care about the car. They don't want to park in the garage. Doesn't matter to them. So we will rent, a garage space out to a non-tenant. And I remember it used to be $100 for a standard garage. We could get $250, easily.
Oh, in Connecticut's got some. Their rates are really high in Connecticut. We've been hunting some deals up there, and we like the Connecticut market. The deals we've looked at up there have been very high rents, like $2+ a foot. So yeah, I don't think you'd have a problem doing that.
We we did come across, and this is the truth. We did come across a self storage, a larger one that you actually might be interested in. That I'm going to resurrect with my partner here. That we
Awesome.
just didn't. It's just like it's over. To be honest, it's over our head. But I will. I'm going to send you the details just on the
Awesome.
off chance that you're interested. More than happy to do that. It's down the road from here. I pass it all the time. It seems mom and pop ish. I don't recall the details on the units and everything. I'm happy to send it. So
Yeah, that'd be great, and yeah, I'd be happy to run through how we evaluate it, and kind of give you a rundown on our
yeah,
checklists, and
yeah,
I'd be happy to do that as well.
yeah, that'd be awesome. I just want to be respectful of your time, but I do want to just real quick overview of like one of the deals that sticks out to you that you've done. It could be the best one, it could be the absolute worst one. Just like what'd you buy it for? Was it a mom and pop that you just sort of threw some management in and cleaned up, and then it doubled in value? Just something that sticks out.
I mean, for me on the acquisition side, one that has a place in my heart that I'm a GP on is in Lake Nona. This was a deal. On the acquisition side, this is a tough role. You're not getting instant gratification in anything that you do here. From a paycheck standpoint. So I had worked with this seller. I mean, we became bros. I mean, we were very close. Talking almost a 2 year from the time I started having this conversation with him. He sent me pictures on vacation, and we're going back and forth, and it was awesome. Like we truly became friends. And then it came time to it's time to sell, and he calls me, and we put our best foot forward, and he calls me back, and he says, I got an offer over $500,000, higher, and then my heart dropped. My heart dropped. And he said, you know what, Matt? I'm not worried about the money. That $500,000, you're my guy. This deal is yours. And still own that deal in Lake Nona, and it's been amazing. So, just the acquisitions guy in me, definitely that's one that, definitely sticks out.
Wow, that's amazing. And we started the show, or a couple minutes in, talking about building that rapport. There's no replacement for the cold calls, just getting on the phone and building that rapport. And that's a $500,000 testament. Wow.
Amen. Amen.
Yeah, that's amazing. Future for Storage Point. Are you just like ramping? What's the story?
Yeah, so we're in full acquisition mode. Like I said, we've built the analyst team, we've built the acquisitions team, we've built an amazing group of executives and board of advisors. We have members there that like Judy, one of the members on our team, she was with Public and Extra Space for 30 years. She was one of the first female VPs for Public Storage. Just to brag a little on the team. So. We've built just such a dynamic team, and now we're really hoping that this market, where we see the market going, really hoping to get to be a high volume, group again, and that's obviously what I came from, what I was accustomed to, and what I've built here. So for us, we honestly have investors, reaching out to us, pretty regularly, and for me, I really need to start sitting down and entertaining those. And really, I've been so singularly focused on building this thing. And we've always had, the investors, to get by. But big picture for where I want to go, we're going to need to ramp that side of things up too. I think with the amount, with what I see coming down the pipe, I think we're going to have to open all those doors up. So for us, it's really just doing what we're already great at, and that's deal sourcing, and then just capitalizing as this market becomes better and better on the buy side.
That's awesome. No, it's extremely impressive what you've accomplished. And I can't believe you really started your company not that long ago. So that's very impressive. It's awesome. Thank you for joining. I think we all got a lot out of it. If someone wants to contact you, find out more about your company, about you, where can they find you?
Yeah, absolutely. The website's www.storagepointcapital.com. You could also, my LinkedIn's Matthew W. Horne. It's Horne. And feel free to even email questions. It's mhorne, it's MHORNE at storagepointcapital.com. And you can actually follow our LinkedIn page, just storagepointcapital.com. We put out educational content weekly. So anyone that's excited about learning more, about the space, we try to put content out almost daily as far as educational goes.
Awesome. That's great stuff. Well, Matt, again, thank you so much for joining Sky's Limit podcast. Really appreciated your time. I think we got a lot out of it, and thank you.
Absolutely, Ryan. It's been a pleasure, and definitely look forward to talking again.
Sounds good. Okay. Thank you. Seriously, it was awesome. I'm very impressed. I can't, when you said early or late 2022 or early 2023, that's cool stuff. That's really good. It's inspiring. Man. So
yeah, it's been I say I may have lost some sleep and maybe a year or two on the life expectancy, but it's been a fun ride so far.
That's great. That's great. Yeah, we'll definitely link your site in the show notes and everything. And again, thank you for your time. Thank you for watching Sky's the Limit. We are always bringing new real estate related content, so don't forget to subscribe so you're notified of all of the latest releases. Most importantly, remember, sky's the limit, dive deep, and invest in how you want to live. We'll see you in the next video.